Welcome back to the channel, Crypto Trend Trader, with our long-term technical analysis on Tesla. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So Tesla has had a pretty massive run up over the last few years, but has been basically going sideways to down as of late and is very close to putting in new cycle lows. So let's switch out here to our longer time frames, and then I'll work our way back to the daily. Initially publicly traded in 2010, we see it start to push up here over 2012, and then it has a parabolic run up in 2013, essentially going from like $2.50 up here to this new consolidation range between like $12 and like 27 or so. Then it consolidates around for years from 2014 until 2019, and then after that 5-year consolidation goes on a parabolic run after that. We top out shortly afterwards and consolidate around this level. But now here on the monthly, we see something happening that's only happened, this is the third time in existence. The 8 and 21 flip bearish right here. They flip bearish right here. And then they flip bearish here as well. So we are in some form of corrective phase. That's obviously no surprise to anyone. So what can we kind of get from this chart? And is Tesla trading technically? So if we just start here at the bottom, the all-time low, and we just kind of see, if we start looking at our Fibonacci levels and where they take us to, are we seeing technical pullbacks, retracements, etc.? So here we go from the all-time low up to the peak here at about $20, and we see a pullback, the deepest retrace back to the 236. So that is an acceptable area of retracement, and then we continue to go higher. So the next key swings here are that same low right there, and then we say, okay, well, there's a high right here, and then we consolidate around for a couple of years. That pulls all the way back to the 786, but again, very, very technically. So we see two key areas, one to the 236, which is the most shallow retrace before continuation, the other the 786, which is basically our deepest retrace before continuation. And then also we can see there's some sort of clear sort of channel or pattern, something going on here as well. So we'll try to pick this low right here, kind of drag it out, see, does that look like we were trading in that range for a while and then we just kind of fell out of it? Yeah, it looks pretty realistic. So we basically have this range right here and then we drop out of it. Looks like we're going to break down heavier. We reclaim that area and then we go on a bull run. So what if we drag it down a little lower and we line up the wick right here? Doesn't change it a ton. Maybe makes it a little more reliable. Maybe do something similar on top here. So we have something along those lines. We basically have a long period of time consolidation before we finally break higher. And we saw we were trading pretty technically too with those retraces as well. So then our next kind of like cycle low after those retracements we did would be this one right here. The little fallout, the little fake out. It's probably tricked a lot of people, stopped them out of their positions before Tesla essentially went parabolic. So what if we take that one all the way from that low there at about $12 all the way up here to about $400, and we see we have basically hit the 236 already and are starting to kind of fall through that. So we know based on that technical analysis for what could be, another essentially wave up here, what we're looking at is we have retraced to the 236. The next key area to watch would be the 382. So we're going to go ahead and put a small box there at the 382 and just kind of pay attention to that level. Now, we also want to look at something else. So it's not as clear here on the monthly, but we initially have a leg up here, and then we actually have a pretty deep retrace, and then we have another leg up, either a retrace right here or a retrace right here, followed by that final push. So let's try to break down what's happening here on a shorter time frame. We'll go out to the weekly for that. So here we are back on the weekly, and again, this was our Fibonacci that we put in place. So let's try experimenting with another Fibonacci. So first we're going to go from the low here and say, okay, that was pretty clearly a leg up and then a deep retrace. That took us back down to the 618. So I'm going to turn that to yellow here. And that's pretty technical right there. We basically, come up, put in a high, and then retrace almost exactly to the 618 before we see continuation again. So then let's put another one here from that low up to our next push up here. So we essentially come up here to that high, and then we don't quite make it down to the 236. So while that is technically an impulse wave, we don't necessarily have like a clear 5-wave structure or anything like that. So this one didn't really work out well. What if we just look at that final one here and we say from this low right here, how high did we come up and then retrace? Well, we already took that out. So we already retraced over 100%. Before that happened though, did it look very technical? Not in particular. So something doesn't quite add up right here. Somehow the count may be off a little bit. Perhaps this is a 1 and then a retrace 2. That was a 3 and then a 4. And then this is our 5 up here. And then, you know, something along those lines. It's definitely a possibility. We don't see anything super clear right here. So let's take that off there. And then what about this? What if this piece right here should go up to the top, and then we'll see how that works out. So let's turn this one blue and then take a look over here. So we came down initially perfectly to the 236. Interesting. Bounced up, put in a lower high, came down here, broke through that 236, hit the 200 exponential and simple on the weekly, and then we tagged the green 236. So this one appears to be getting a lot more play. So maybe what actually needs to happen is maybe we need to really look down in here and zoom in on this first little thing and see, hey, is that maybe a wave? So we push up there, we come down to the 0.5 or arguably almost the 618. That's one. And then the 2 is the retracement. And then we see another leg up here. That would be our 3 and a retrace to the 618. Again, not super technical, but then we see another leg to the upside. So that definitely seems like a possibility, at least worth paying attention to. So essentially what this is telling us is that maybe we did something like this. We did a 1, 2. We did a big 3 right here, a deep retrace of the 4, didn't violate the 1, so that's still following the rules. And then we came up here for something like this. You could either call this a 5, and then we have an expanded Elliott wave flat, similar to, you know, what we saw basically on Bitcoin, where we came down, retraced pretty deep. We went to a new high, and then we'll continue the retracement, something along those lines. We don't know specifically, but it looks like something along those lines is a possibility. Now, it's not perfect, and sometimes Elliott wave is very, very textbook. Other times you have to get a little creative with it. So what we're going to do is we're going to just consider both those scenarios. You know, one where basically that was 5 waves up, and then essentially you could look at one where it was something closer to this. The 1 is up there. That's the 2 instead of the 4. This is the 3, and then the potential shallow retrace followed by a 5th leg up. Potentially a possibility. But regardless of that, it doesn't matter if we're right or not if we understand those hypothetical situations, and then we just respect both those possibilities. So essentially what we're looking at is the blue fib from this one right here, and that being a 5th leg up, or the green fib, and this being an entire 5 waves. So that being said, both of those are getting play right now. And what that's telling us is that there are other players in the market that are watching the same thing we're watching, and some are watching one and respecting that, other watching the second scenario. So either one of these is still in play and looks pretty technical for now. So what that tells us is we know obviously we've hit both the 236s now. We need to pay attention to where the 382s are. So we know where the 382 is. Obviously that's where we put in our box right here. But maybe we see a shallow bounce at that initial 382 in blue right here. So we'll respect that as well. But more realistically than not, we would think we're going to get an initial bounce, a back test, and then come lower to this 382. And if we get down to this 382, maybe we're actually going to come down to the 0.5 in blue. So we'll put our box between the 382 and the 0.5 and look for around that level. And that's going to give us essentially a nice target to the downside for our next big wave. So we have an initial target to downside for a retest around 137. And then we have like a macro potential final target to downside at 382 or 0.5 retracement somewhere around 100 to 110. Somewhere around there. So that's what we're going to look at. Now let's switch back to the monthly real quick. Now that we have a pretty nice breakdown on Tesla. And all we're going to do right here is just turn off the drawing tools and then turn back on the indicator oscillators. So we have the TDMACD, essentially a bunch of red histograms in a row. We broke down below the slope line, and the slope line has now flipped red. We went all the way down to the 0 line, and we're basically losing that level as well. So what that's going to tell us is there's strong strength to the downside, lots of momentum to the downside. And then if we look at the jewel thief as well, we'll see the knife is powerfully angled to the downside in red, and then both the blue and pink stochastic as well, very close to approaching the bearish control zone on the monthly for the first time ever. So right now what's taking place is we have the lowest low ever on the stochastic monthly for Tesla right now. So not the best time to necessarily be getting bullish, as this is the weakest Tesla has ever looked based on that indicator oscillator. We talked about the flipping here as well. Let's go over to the weekly now and take a look. So here we have on the weekly, we're in strong uptrends when we're above the 200s and they're blue. We're in retracement periods when they're red and we're below them. And here we're in a very strong period, and now we're testing them as support. They should act as support when we come down to them. But what we're paying attention to is, are we putting in a series of lower highs and lower lows, or are we just retracing before we go higher? And essentially we know from what's been happening lately that we're putting in a series of lower highs and lower lows. If we basically look at this scenario right here, let's kind of draw that out a little bit. We basically have a couple different ways you could kind of draw this channel, but something along those lines. We have a high, a low, a lower high, a lower low, a lower high again, and now here we are putting in a lower low. So we would just assume that while we're in a downtrend, consistently putting in lower highs and lower lows, they will continue to do that until we don't. And so that means every time we come down to support, we would expect that as a buying opportunity. Every time we come up to resistance, we would expect that as a selling opportunity. And the more of these points or moving averages that line up in a single area, the more reliable that is for us. So here we're at the bottom of the support channel. We're at our macro Fibonacci level. We're in between the 200 exponential and simple. This seems like a likely area we would find support and potentially going to move back up at least to the 236. So what we're looking at now is, okay, we could get a potential move up here about 20-21%, not violate anything, and then still go lower. We could get an even bigger move up here all the way to the top of the channel, something closer to like 45%, and still not violate the downtrend, so move all the way up here and then continue on lower. So we don't want to get overly bearish right now on Tesla. Now, if the situation should arise that we do break down from this channel and see a convincing break, a retest and then continuation, we could take the measure move of the breakdown and say, where would that take us to? Roughly around the target area that we're looking at. So again, this is trading very, very technically, and we're seeing a lot of things line up. So either situation could take place right now. And honestly, this is one of the best scenarios you could possibly look for. I always assume that while we're inside of a trading range, such as this descending channel, that we're going to stay inside that trading range until the one time that we break. So I just assume we'll continue to trade inside that range. But now, because we're at this key support right here, because there's so much confluence, it doesn't matter if you're actually bullish on Tesla or bearish on Tesla, because if we hold support, the move to the upside is essentially the same as if we break support, the move to the downside. So the risk reward is basically 1-to-1 because the upside move is essentially the same as the downside move. We're at about 173 right now. Our target would be around 105. Our target to the upside would be around 275. So essentially the same move roughly. So the risk reward is not particularly great here. And depending on the time frames, you could say, well, we're bullish because we're above the 200s on the weekly, or we're bearish because on the daily we're below the 200s. So it does depend what time frame we're looking at to tell us essentially what the scenario is. Now, if we turn up our indicator oscillators here, we've seen some weakness in Tesla. It printed some bullish divergence. We got a little pop, but it was overall pretty weak, and we couldn't get back above some key support levels that we broke down from. And if we look at the indicator oscillators on the weekly, we see we're at new lows on price action. We're at new lows on the histograms and the stochastics. So again, no clear indication from those either. And we know the monthly is extremely weak. So at this point in time, it looks like short term, we are still, if we look at the weekly time frame, we are still in a bull market for now, and we're down at support. So the trade to take, in my opinion, is short term to the upside to try to capture what amounts to 25 or 50% move. And then after that, we can start looking for shorting off the top of the range. And then obviously same scenario happens. Maybe we break up at the top of the range and go higher, at which case, the measure move to the upside would just be once again the entire range, something up there. So we could pay attention to that. That would take us to new all-time highs. The possibility should it arise. But for right now, what we're looking at is if we stay inside this range, we have a potential 58% upside. If we want to take the initial move back to the 236, it's about a 23% upside. And we can do that with about a 7.77, roughly 8% stop loss. Because if we break down and start closing new lows below the 200 simple, we don't want to be in this trade anymore. So that will be our initial take profit to the upside for a potential long trade on Tesla. And then if we look at also the potential continuation scenario that could take us back to the top of the range, we're talking about like roughly a 50% move. And again, that same stop loss. So we have a roughly 3-to-1 risk reward ratio in what is technically a bull market on the weekly still, and a 6.5-to-1 risk reward ratio. Again, technically still a bull market. And then the opposite scenario, okay, what if it does break down and we start looking at that scenario? So we can either take a long trade or a short trade without being biased and see if they both make sense or if only one makes sense, etc. And that's the beauty of being at a pivot point. It doesn't matter if you're directionally biased to the upside or to the downside. Oftentimes, opportunity presents itself in both directions. So if we start breaking above that local high right here at roughly like around 200, we want to be out of this position as we will have taken out the most recent high, and we likely see that continuation to the 236 or possibly the top of the channel. If we break down from here, we're looking for an initial target of the 382 in blue, if not a continuation target deeper down to our green 382 or our blue 0.5. So if we just look at that one more time, and then we extend this down here to roughly that range and the measure move, what we end up with is 12.65 stop loss and a 1.64 risk reward. So there's not really a good risk reward to bet on the downside right now, because we have to bet 12% to try to make 20%. So that's not really good. The minimum we want is 2 to 1. So we can rule that scenario out right off the bat. And then if we look at the next scenario here, we have the, and then if we look at our next scenario here, we have basically a 12.75% stop loss. Again, if we start breaking above that local high, and then also the downside target being the 382 and the 0.5, that gives us about 39% potential to the downside, which is a 3 to 1 risk reward ratio. So it's not bad, but obviously we see here the real trade right now is to the upside, at least until we get back to resistance, and then we could potentially short off the 236 or off the top of the channel. So while I do think Tesla is headed down lower, potentially as low as $100, in my opinion right now, after the move that's been taking place, at all this confluence of support, actually the trade short term is to the upside. And I'm not talking about investing. I'm not talking about hodling or anything like that. I'm talking about locking in like 25 to 50% gains before we can enter into a short position, or before we just take profits and sit back on the sideline. So that's a little bit of a move on Tesla and potential trade setup there. And if we just look here real quick on the daily, I'm going to turn off the indicator oscillators, and we see very clearly we're basically just trading inside this range. We're at the bottom of the range now. So what we're betting on is that we revert to the mean, back to either the heart line and center of the range for that 20-something% gain, or back to the top of the range, back test the 200 exponential and simple. And then from there, maybe we get rejected, go back lower, maybe we break out to the upside. But regardless, that's capturing a potential 50% move. And then if we look at the indicator oscillators on shorter time frames, we see it's not looking particularly good. We did have some bullish divergence. So there is potential. We put in a third drive of bullish divergence by putting in a new low right here. And then off of that, we can catapult higher back to one of those key levels. So right now, I'm looking at entry basically where we're at, right around 173. And then I'm looking for targets to the upside around 210 or potentially as high as 257 before in time we likely go much lower. So that is it for Tesla long-term technical analysis. If you enjoyed today's video, make sure to leave a like and subscribe. If you'd like to request an asset for us to take a look at in the long-term technical analysis, leave it down in the comments, and we'll be glad to add it on to the list. But that is it for today. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. This is our long-term technical analysis on Tesla stock, ticker TSLA. I'm Crypto Trend Trader, and I'm out of here.